The most famous trend line in the history of trend lines has been breached. Welcome to Volatility 411 for Equity Armor Investments. I'm Joe Teagate. Let's jump right into it. Everybody all year long have been talking about the trend line in the S&P 500. Dating back through last year, every rally had sold off right at that trend line. We set up lower highs all the way down. Finally, last week, we broke above it, and the bulls really started to have a party. This week, we saw volatility get suppressed. The VIX closing below 20 yesterday. And yesterday, of course, the market just felt like everything was going to be going up forever until we started to get some bad earnings. Microsoft reported yesterday, and Microsoft was really a microcosm of this whole reversal. They were up initially after the earnings. After a while, they sold off during the conference call. The conference call, they talked about a slowing growth forecast. So for a lot of growth companies, that's really bad news, certainly, and we're seeing the market get hit today on that news. The NASDAQ is the worst performer. The S&P 500 is a bad performer, and of course, across the board, the VIX, for its part, up very significantly. We're back above 20, certainly, and it seems like risk is off today. Going forward, we have more earnings we're going to be watching. Maybe that's kind of the key. Maybe we need to think less about the Fed now that they're closer to their terminal rate. We're going to start seeing focusing on earnings and the economy. Today we have Tesla that may or may not be a market mover, but it certainly should be interesting to follow. And of course, next week we have some more big ones, including Apple, will be very important to what happens with the market for the rest of the year. For Equity Armor Investments, I'm Joe Teagate.